The morning report for the 19th of May 2011. The US market had a good night. Dow Jones up over 1%, S&P 500 and Nasdaq following suit. That sort of buoys our market going into today. We certainly expect to see a bit of a positive day, though our market was rather flat yesterday. The All Ords was up 0.25% to close at 4,765, and the ASX 200 closing just below 4,700. Keep in mind, fair value for the market is sitting around 5,200, so we can still see some more upside, though there is a few factors pointing to the market pulling back a little bit in the short term. I'm very cautious in the market, obviously using any dips to pick up some quality blue chip stocks, paying good dividend yields. I think yield is what you need to chase in this market and not to worry too much about the ups and downs as it trends along. Now, the other interesting news to come out yesterday, which has been coming for quite some time, is the government now is looking to dip in your super to fund infrastructure projects across the board. Now, I'm going to write about this in my newsletter this week, so if you are interested or you have industry super, I certainly think you should take a read of it. What's happening is the government is changing legislation to allow super funds to invest in infrastructure projects, especially government infrastructure projects. Now, these will bring negative returns in the early stages. Now, the early stages is somewhere between 3-5 years of an infrastructure fund. They're trying to get people to move away from direct equities, which I don't quite understand, as you can get invested in infrastructure through direct equities with liquidity. So it's a very interesting move by the government. Certainly, if I was in an industry super fund, I'd be taking a close look at this article and keeping an eye on what my fund was doing. For any questions or queries, please go to our website at growyourwealth.com.au.